Right, mortgage rates have gone crazy. They are on the rise. Everybody wants to know why. We had a huge day of rates increasing on Thursday, February 25th. Yesterday, as of this morning, we're back in the green. Friday, February 26th, but who knows what's really going to happen. Now, after all is said and done and the dust settles, because they really have been going up and down, we think that the rates are going to settle around 3.25% to 3.75%. And everybody wants to know why. And the short answer is the economy. The economy is improving and rates go down with a bad economy. Now, before we get started, I did want to let you know, if you were looking to refinance and you want rates in the mid-twos again, I do have a rate watch feature. If you're watching this on Facebook or YouTube, there's a link down there where you can fill out a form and we'll keep you posted on any rate rallies coming up in the future. So do take advantage of that. So back to the economy. We basically have three areas of the economy that's really been hit hard by COVID, right? Which is hospitality, travel, and entertainment. And the rest economy has been pretty strong that we've seen overall. But remember when the lockdown first happened, right? And I remember just imagine your first trip, my first trip to the grocery store when we didn't know when we were going to go back to the grocery store. Remember that time when there was no toilet paper and all that? And it was just eerie out in the world. That's when we started getting these stimulus for these mortgage-backed securities and these rates that we've seen in the last 12 months. Now the world's a lot different. Everything's looking a lot better. The vaccine is here, right? And unemployment remains high. But with the vaccine rolling out, that can change pretty quick because what's hurting in the economy, as we just discussed, right? Entertainment, travel, hospitality. Raise your hand if you want to travel. Raise your hand if you want to go to a baseball game or a movie or a concert or anything. Raise your hand if you want to go to a restaurant, right? I can't wait to go to teppanyaki again or anything. So there's a super pent-up demand and people are going to be spending money, traveling, having fun out in the world because we're all fed up. So with unemployment down or up, I should say, we do think, it does make sense when the economy does open up, all these jobs are going to be coming back. And so we do think that's a huge bounce back. Other than that, if you look at the stock market, right, the stock market has gone crazy. This is a look at the S&P. We can see where it dipped at the beginning of the pandemic, and then we can see what's happened since then, and it's been pretty incredible. We've had Congress tied up with impeachment, right, and now that that's over, it's full board stimulus and economy, and rates have started going up right after the impeachment as well. And the Biden administration, we have Biden out there, we have Yellen, and we have this open paycheck, and they just want to spend, and make it rain and spread the love and do all these things to help stimulate the economy. But globally, or let's just say the reality is central banks and globally around the world, it's a big deal for inflation. And we're seeing that happen right now. Another big thing that's happening out there, right? We're seeing oil prices go up, which is because the world's demanding more oil as it opens. Lumber costs are going up as we're starting to build a little bit more. And things are going up in price, and that's inflation. Now, what else is confusing is the feds keep telling us that the federal funds rates they're going to keep it at zero, right? And so everyone thinks that mortgage rates are at 0 too. And they're two completely different things. Do watch my market outlook for 2021. Again, I have a link down here on Facebook and YouTube. You can check that out. I kind of go into that. But we have seen mortgage rates at 5 1/8 and the federal funds rate is 0. The rates are still incredibly low and historically low, so there still is a ton of opportunity out there. If you think you missed the boat, again, check out our rate watch. I do think there'll be an opportunity for us this year at some point. And otherwise, there's still a great time to consolidate debt and all these other things you can do out there, buy a second home investment property, first-time home buyers, etc. Anyway, I'm Garrick Wordmuller. Thank you for watching. Please like and subscribe and do check out that Market Watch video, and the Rate Watch feature is there for you. Have a great day.